Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, June the 30th. The year's 2021. Let's talk trading. The battles versus the war, part 3. And this video is for educational purposes only. Your results may differ from mine. We've been talking about the battles versus the war. And, mainly I was talking about, or at least the first in parts 1 and 2, we talked about the battles on the chart, but there's another battlefield. And you probably know where I'm going with this, don't you? And this battle is the battle in your brain, where you basically have fear and regret, and you have greed. These are some of the things that you have to battle. They're a constant battle. And until you master your brain, it's always going to be a struggle. You have to get to the point where when you enter the trade, no matter what happens, you basically don't have an emotional response. You don't get mad, you don't get glad. You just go about your business of trading. You stay focused on your method, on your system, on what the chart's telling you. You're analyzing the chart from an objective standpoint, not an emotional standpoint. And it's tough. It really is tough because you got money on the line and you have this desire, this goal that you want to make, 10 pips a day or 20 pips a day or 50 pips a week or whatever it is. And what happens is when you're not hitting your goal, you're not winning those battles every trade. So it's like every time you take a loss, it's like you're moving away from that goal. And maybe you start to get a little ticked off. But you see, that is where the problem lies right there. Because it's okay to have a goal, but that's really not where your focus should be. Might sound counterintuitive, but if you think about it, when you're looking at your charts, you've got this chart, you're sitting here and you're seeing how the candles are formed. You're seeing that price has gone down. It hit a high with here a little over to 38.70, and it's all the way down to 05 right now. What are you supposed to be doing? You're supposed to be waiting for your signals, paying attention to what the market's doing, and when you get your trigger, you enter the trade. You don't think about it. It's like you've already done the thought ahead of time. You know what the trigger is. You know when the trigger is happening, and you trade accordingly. And it doesn't matter what your method is. I mean, it could be the Walmart method, where you're sitting here and you're waiting. If that price hits 38.10, you're going to go long. Or you see here it hit the 34 or 3804.2, and you would have gone short off of that previous hour low, as opposed to waiting on the double zero. And then you look and you see, well, what's price doing? It's hit there. It went back up. It came back down. Maybe you got in that second time on the M5. And then you saw it didn't make a new low. Maybe you punched out, scratched the trade. Maybe you picked up, a couple of points. Maybe you're still in the trade. Depends on how you want to manage the trade. Point being is no reason to get emotional, no reason to be upset, no reason to do anything but what you're supposed to do, which is focus on your method, take your signals, manage the money, manage your risk. That's it. And after you've clicked the mouse, all you're basically saying is, has one of my exit criteria been met, whether it's a stop or it's a take profit? And that's all there is to it. But what happens is so many times you get fixated on one thing and you want the market to go one way, and you look for all the reasons to jump in that trade. You look for no reasons to tell you not to be in the trade. And then you look back, hindsight, oh, I should have. Well, what you do is you make a note on a 3x5 card, or post it, or use the TRO My Notes indicator, put it right on the chart. And that way, the next time that same thing happens, you know what to do. So those should have, well, I should have done this, becomes this is what I did. And that's pretty much it. That's how you improve. Now, they always talk about journaling, and that's one of the ways to do it. Now, there's something else I want to bring up, and it's another battle, and it has to do with your brain. And I'm going to paraphrase something. I forget what I was reading, but they said that you had this syndrome. Well, in trading, one of the syndromes, I would call it the indicator acquisition syndrome, where you're trading a method or you're trading with an indicator or something, and it's not quite giving you the results you want because maybe you haven't worked with it long enough. But you want those instant wins. You want to pop that indicator on the chart and start winning right off the bat. I mean, who doesn't, right? So you might go, TRO, these horizontal lines just aren't working out. So you find, the latest shiny objects indicator out there, and then you plop that on the chart. Maybe it's Renko blocks, maybe it's some squiggly line, something fractal, linear regressions to, who knows, rainbows, and then you pop that on there. And then that doesn't work. And then all of a sudden there's some other new indicator, the indicator that beats all other indicators. So you put that on. And then you see something else that tells you, oh no, you got to have this dashboard, and then you'll never miss another trade. It'll tell you where the trades are happening. So then you jump in, and you're trading one pair 1 minute, and then next few minutes you're trading another pair, and you just always seem to be missing. Because as soon as you jump from one pair to the next, that first pair, the one you just jumped from, does what you wanted it to do. But guess what? You had your eyes somewhere else. Grass is always greener, right? It's tough. And as I tell traders, you have to cut down variables. You need constants. You let price be the variable. Because that's, if you can just let price be the variable, and then trade accordingly, then you don't have to worry about all those other things. They're just not even on your screen. They're not, tempting you to do something. So right here, like I said earlier, had you gone short on that second break, you see it didn't make a new low. It started to reverse. It reversed past the bottom of this candle here. I mean, just scratch the trade. So what if that trade you didn't make any money? You made a point, or you lost a point. That's nothing. That's literally nothing. If the trade didn't work out. Sometimes trades work out, sometimes they don't. You just don't know ahead of time. And so that trade wasn't doing what you wanted it to do. Just get out. There's no shame in that. Just like now, if you went long here on that first touch, it's not quite doing what you want to do. So maybe you're going to give it some breathing room. It's only 6 pips away, and you'll see what happens. Or maybe you said, that's first touch. I don't do first touch trades. I'll wait for the second touch. So you wait for the second touch. But you decide these things ahead of time, and then you just execute according to your playbook. I've talked about the exit playbook. I really haven't talked much about an entry playbook because that depends on your method. You see, exit playbook has to do with managing your risk on the one hand, and it has to do with managing the money, the profit on the other hand. So risk is managing, your losses, and then the money management is managing your profit. And I separate those two. But the method is basically that's your entry. And so there's so many different methods out there. I mean, we've got, what do I have? I've got, weekly open gap fade. I've got the daily pivot fade. I've got the daily wick zone. I got the buy zone. I've got, in the rat zone. We've got the DSRs, accompanied with the 3-level ZZ and the lowest high, highest low. So there's many different methods. I like to fade the pivot on the H4. I find that to be profitable when I'm doing the day trading, just looking for that trading, looking at the H4 candle color. Let's see if we switch over to H4 here, and I know that pivot's somewhere along here, and I can see where the H4 is. So when we get a new H4, it's going to probably head towards that pivot point and take it out. And then looking at, the lowest high, highest low right here, there was a trigger. If we've been looking at this screen, and you'd be up 3.7 pips at the moment. When it punched up here, that was probably what? Almost 5 pippers. You could take your money off the table, or you could just do as Walmart does a lot of times. He'll just hit his reverse button. He'll exit the long and get short. And you see right here, you'd be up 0.6 at the moment. And the main thing is, I'm trying to tell you in this video is the other battle isn't on the charts. It's between your ears and your brain. And that's a battle that you're going to have to manage every trade. Every trade. And as I used to say, or still say, a long time ago, it's like, trade what you see. Just, trade what you see. Not what you think, but what you see. And a lot of times people, when I ask them, so tell me what you see on the chart, they'll start talking, about concepts. Well, it's hitting resistance. Well, there's no such, no, you don't see resistance. What you see is some black rectangles, some white rectangles, and that's what's on the chart. And you can see that, is this rectangle higher or lower than that one? And it's really funny because, if you ask a young kid, a grade school kid, what they see, that's what they'll tell you. They'll tell you exactly what they see. Because they don't know these concepts. And a lot of times what happens is you have these concepts in your head, and then you get you've become prone to confirmation bias, and then you try to explain what you see in terms of the concepts, and a lot of times it doesn't quite work out the way you want to. So, fellow traders, I tell you, the 15 minutes really is pretty quick when we're talking about trading. So hopefully that'll help you with your brain management, and you can win that battle, those battles, so you can win the war. Because remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. And let's see, really, this is almost time for a monthly wrap-up since it's the end of June. And tomorrow will be monthly open. So, I hope to see you then. This is the Rumpled One. Over and out.